Hey everybody, Boris VK Force. Welcome to our weekly technicals for the crosses for Sept 10 to September 14, 2018. And the crosses actually contain some very interesting, some of them very counterintuitive setups this week. Let me show you what I have in mind as far as the cross selections. So the first trade is something that we really talked about already last week, but now starting to show some acceleration to the downside, which is Euro Swiss with 113 now, resistance 111 looking to be support. We broke some very major key levels, and I'll show that to you on the charts in just 1 second. Odd CAD is kind of very interesting trade, and it has a 93 support, 95 resistance, but I'm going to save my conclusion to the point when we get to the charts, because I think this is one of the more interesting counterintuitive trades that we have setting up this week. And Euro Pound has come into a very interesting support level here now. Still very much an uptrend trade, but now if you really believe in that uptrend is the time to buy, because we're very close to some very key support levels. So let's take a look at the charts first and see how it's setting up. Let's just take a look. First, let's take a look at Euro Swiss. So this is Euro Swiss. Now let me go through it daily because the weekly is way too big. So here's a daily. What's interesting to me about the daily chart is that we broke the 500 period SMA the week prior, and now that downward momentum continues. And the fact that we continue to the downward momentum suggests that once we break the major support level here on the SMAs, we have scope for extension all the way down to the 111 level. So if we go out on the charts, we see that the support here really, on longer term charts doesn't come until about 110, 111, 110.09. So there is plenty of room here to the downside, given the fact that we broke the major long-term support SMA. And that's simply a function, of course, of risk-off flows that continue to persist. If we get any further tensions on a trade rhetoric front, it makes the Euro-Swiss trade even more vulnerable to the downside action. I like this as a momentum trade, and it looks very good technically for all of us. Now, the converse of that, the positive Euro trade, if you believe that supports will last, is this Euro Pound. Now, this is not less a positive Euro trade, it's much more of a negative pound trade. And again, basically a bet on the fact that Brexit becomes a busted deal that doesn't get negotiated. What's interesting here is that you see the 89. Yes, we broke the 20 period SMA, of course, on the uptrend, but the uptrend still very much remains in place, and we still have a series of higher lows. So to find out if these higher lows really exist, and if they can maintain themselves, 89 becomes a natural level here. So I would say the stop should be right below here, which is what's the low here? I guess 88.50 would be the pretty much the full-on break of this upward trend, a big distributive top here, and all of your assumptions about the upward trend being busted. But as long as we can kind of hold around here, this is pretty serious support level, and a move back up, of course, takes us all towards the 90 level. So the uptrend still preserved, a little bit tenuously, but the risk is relatively small here if you want to test the upward trade here in Euro Pound, and that's what makes it kind of interesting. The last trade is, I think, the most interesting in terms of being counterintuitive. So Aussie CAD. Now remember, I'm negative Aussie, lots of negative momentum. Certainly looks horrible against CAD as well, right? All this kind of stuff. But here's what's interesting. The crosses tend to do very often the exact opposite of what makes sense. So if you look at, you can even see this on a daily basis where you have one step forward, 2-3 steps backwards sometimes. So here we have momentum to the downside, and it completely gets reversed on the next move, and that's kind of natural because the calm dollars themselves are going to rebalance against each other. But I think what's interesting about this particular trade is not just the fact that it has a chance to bounce, which is I think it does, but the fact that when you go on the weeklies, this 93 level is a very serious support level. You get 93 over here, 93.20 over here. There's just a lot of support here. So even though this looks horrible on the weekly charts, right, with a nice big flame out to the downside, I mean, if you're trading this momentum, it's a classic momentum trade. The key thing is, though, it's a cross trade, which means that everything up looks down, everything positive should be negative, everything negative should be positive, meaning that the reality in crosses sometimes is the exact opposite of what the technical signals are showing you. So yes, you could take this to the downside and think that there's some momentum here, and probably there's some momentum. I would say you have a reasonable chance here for momentum for maybe to 93. So yes, there's still, like, I think 30, 40 points worth of momentum. But the more interesting trade, sort of, I think the bigger profit possibility trade here is to actually fade any move to the downside, to make bid underneath 93.50 with maybe 92.50. Absolutely, 92.50 would be your ultimate stop. And then watch the whole thing reverse as you get the rebalancing in the calm down. So to me, the fact that we could have a bounce back against the shooting star, very negative. How many weeks, by the way? This is 1, 2, 3, 4, 5, 6, 7, 8. 8 weeks of downward momentum. Also, just screaming for mean reversion trade. Remember, the best mean reversion trades are always in the crosses. The crosses very rarely have a one-way trade because of the nature of the beast. Unless you have a extremely strong interest rate differential story that just perpetuates itself for months on end, it's very difficult to find any kind of a cross pair that has a uniform straight up or straight down trade. It's very much always kind of a zigzaggy move. And when you get to very strong mean reversion levels where 6, 7 weeks of downward action one way, the possibility of a move the other way becomes exponentially higher. So to me, the interesting trade here is to actually fade any weakness in Aussie CAD for a possible bounce as the counterintuitive trade of the week. Wish you guys the best of luck, the best of trading. Boris Schlossberg, over and out.